Alright, hey, what's going on, guys? This is Notified Apple, and I'm actually finally coming at you again with another video. It's been about a month since I think my last one that I uploaded, but again, I'm sorry this one is a little bit overdue. I did promise in my last video, my Trading 101 video that I uploaded a little bit ago, that I would go over some strategies that I have been testing for a while, and of course we'll release them out to you for free. You know, these are some really profitable strategies. I mean, you can see right now, at least on TradingView, I'm in one right now where I'm entering in on this cusp right here, and I plan to exit a little bit down here just for a small little quick scalp. I mean, I anticipate about, you know, 1.2% profit, which by all means is pretty good, especially if you're using 25 times leverage. That's still about at like a 30% gain. Like, we're watching this in real time and might close pretty soon. Well, we'll keep an eye on it. But basically, yeah, this is involving the strategy that I have been talking about, or sort of been using for a little bit, and have had really good results with. I have kept a live trade book of those trades. However, the thing is that those are backtest trades, and I don't want to get anyone a little bit too excited over those, right? Because the results I got back were astounding. But the thing is that I don't want you all to have like a set percentage in your head that what you're going to get from these strategies, or feel like if you get less than that, or you're doing something wrong, or if you get more than that, you're doing something better than I am. I mean, really, it's all just timing and what you can do with it, right? So basically, I'm going to go over two strategies. Basically, in my time, just absolutely just scouring the internet for people's ideas and what they're doing for trading, and one that's always come back to me, and one that Tyson heavily advises people that use his indicators is divergency trading, and that is the first one we're actually going to be talking about today. And divergency trading is something that CryptoFace even tells his market cipher users to use. Tyson tells us to use, basically those who use his program, which, I mean, really, market cipher in this, it's very similar. I mean, we've already kind of gone over that before if you saw my market cipher video. And basically, we're just using that strategy to make some really sexy profit gains. So what we're using right now is CryptoWave 2.2. Which is the updated version from my market cipher video. He has updated it since, and we're going to be using that. So it does look a little bit different than the initial version I showed in that one video. I don't usually use the RSI. That's the thing. I do not usually use RSI. And we can go down here, RSI right here, just uncheck that. And what we're also going to do is we're also going to go to plot, right, which is the VWAP or wave oscillator, whatever you want to call it. We're going to go to line. We're also going to go to make it yellow, so it's bright and nice and easy to see. We're going to make the line thick, and we're going to make it very opaque, very visible. So right now it's very clear to see, minus the weird dots that are on there. There we go. So pull this up a little bit bigger so you can see. So one thing that's definitely new with this version of CryptoWave is that it actually marks the divergencies, and you can see there's two icons for it, R and H. H just means hidden or convergence. R means a regular reversal, regular divergence. The thing is that those are kind of complicated to explain. I would highly recommend actually watching a video I'm going to link right now, actually down below, that explains it very well. But basically, just to put it all really short and a condensed version, you're wanting to look where the price and the waves, the blue wave, does the opposite thing, right? CryptoFace sort of makes it out to be anytime you see a big wave and a smaller wave, that it's a divergence. Not true. You sort of want, I mean, it's kind of true, I mean, in a certain light, but basically you do want to look more specifically when the price does the opposite thing of what the wave down here is doing. That's basically divergence in a nutshell. And the video I linked will go a lot more in depth into that and sort of explain it in a very easy to understand way. So going forward, we can see right here there's a normal divergence right here, and it does go up, right? We can tell it actually does go up. Whenever that happens, it's a good indicator that the market is out of steam for that specific direction, at least for a short time. And that'd be a really good entry point for you. So basically, all right, so we know when to get in, right? It's whenever the waves cross and makes a divergency right here, a little discrepancy in the market. Okay, so now we're in. when do we know when to get out, and when do we know where to put our stop loss. Because all good traders use a stop loss, honestly. If they want to control their risk, and if they really want to know what they're doing, if they know what they're doing, they're going to probably use at least a stop loss. So what we're going to do, right, is there's two ways of going about exiting this, right? One way you can go about it is you can close basically on when the wave appears on the other side of the graph, right? When it appears on this side, which if you did do that, right? If you entered about up here, just saying, you know, against your interest, you would have closed at about closer to 0.98% gain, all right? If you used limit entry and exit, you definitely would have gotten a little bit over 1%. So that's a pretty good trade. Another way to go about it is, I mean, you can see all these dotted lines right here, except for these right here. It is an auto Fibonacci by Tyson or Crypto Pro Tools. I'll probably just call him Tyson from now on, just to keep it short. But it is a really, really useful tool that automatically draws Fibonacci retracement levels. And if you don't know what the hell that is, basically just take it as like mathematically projected support and resistance levels. Right? It's where price is going to bounce in and out from. When you set a take profit around the Fibonacci resistance or support level, it will very often touch it. Now, as you can see, it went aggressively in the opposite direction that we actually wanted it to go. So how do you sort of minimize that impact or keep your trade safe? Well, your stop loss, that's where it's usually going to catch you. So for example, you would have been better off if you just exited when the wave appeared on the other side. That's just a no-brainer at this point for this specific example. However, you set your stop loss around the lowest or highest wick. I mean, depending on the direction of your trade. So if we're going up, we're going to go look at these bottom wicks here. Around here, around this one, the lowest, most recent sort of wick down. That's when we know it's really going to be achieving lower lows or higher highs, whichever side you're trading on. And we probably would have exited, if we aimed for Fibonacci up here, we would have exited for a small loss. We're looking at, yeah, about 0.1%. So you pretty much would have lost as much as you could have won if you just exited right there, and probably a little bit more if you actually used a market exit for this one. But that's just one example, right? And so let's see, let's look a little bit further back. We're actually going to look about right here. This is an actual divergence. It doesn't mark it. That's why it's so important to learn these. But right here, you would have entered probably in the lower spectrum of it, right? And you would have exited when the wave appeared on the other side. So yeah, about here. Worked out pretty well in your favor. So 0.4%. That's still pretty good. That's still winning. That's what's important. And this is just a 30-minute. Usually you might want to trade a little bit of the higher time frames, like the hourly. That would have got you in overall a better position. So you would have entered about here. You would have exited about here. And if you actually set your take profit lower, you would have made actually quite a bit more. So I mean, it depends. It really does depend. And so a good way to set targets, if you're going to be using Fibonacci based off that, is to set it a little bit below or above, right? A little bit above, you're going to be a little bit riskier, a little bit below if you want to be more conservative, because the goal is you want the price to go at least a little bit above where your target is, right? Because you want it to be filled. You actually don't want to risk selling at absolute top dollar and no one else buying that position, because that's how you get caught. That's how you lose. And then the next strategy we're going to be talking about is actually this little wave right here, right? It is the VWAP or the wave oscillator. Basically what you want to look for is when it crosses to the other side. You might have heard this before, but we're going to do a quadruple confirmation, right? Which is extra security. So we're going to be looking about up here, right? Let's say 18th of November, right, at 0 o'clock, basically as soon as it turns to the next day. We're going to be looking at this. So we see the wave, the VWAP oscillator, is going way down. And what we're going to want to do is we're going to have check charts that are intervals of each other, like 30-minute, like 30 times 2 is 60, right? It's an hour. An hour times 2 is 2 hours, right? 2 hours times 2 is 4. So basically we're going to start from up to bottom, right? From 4 to 2 to 1 to 30. So we're going to be going to 2 hours to see if it's the same thing. Again, it's 18th of November at 0. It's down below again. That's what we're checking for. Yep, very strong down. 30 minutes to really go back in time for this one. Yep, it's down for that one too. So we would have entered this one. Every single VWAP on every single time frame we've looked at is going down. So we're going to enter. And I'm going to tell you right now, this is extremely impressive. Like, I have to really compress the chart for this one. And the key is to only exit when the wave comes out on the other side. Then about, boom, right? 4.24% profit in a day. So if you use 10 times or 25 times leverage, you would have made very close to 100% your position, which is awesome. That's what you want. And again, we see down here a divergence that happened, right? And now it's just shooting up, We're probably going to be tapering off. Emily's betting it's going to hit our take profit right here. I mean, it's just working out in our favor. It's doing great. And again, we're probably going to be setting up another divergence, and we're going to be going even deeper. Definitely would wait to buy Bitcoin if you're doing that right now. I would definitely wait to buy Bitcoin if you are interested right now, because it's going to go cheaper and cheaper and cheaper. Just from what I'm observing here. But basically, that's all the strategies I have to show you right now. You can probably look at more examples. I mean, CryptoFace, he does examples all the time. Kite is actually the guy that I learned this yellow wave strategy from. I would highly advise looking him up and trying out his strategy that he's listed. It works really, really well. He provides more examples and he goes a little bit more in depth than I does, but this strategy does work and it gets you some pretty good results. Actually, let's look up one more example. This one right here. On the 4 hour, you see, I mean, this is the 24th of October, so this is way back. So you see it kind of perks up here at the 24th of October at around 8 to 12. Same thing for the 2 hour. Same thing for the 1 hour. And I imagine it's pretty much the same at some point for the 30 minutes. So we're just going to assume that. So, and you can already just see what the fuck's happening here. You can already see. And then just shoots up. Oh my goodness. Until about here. 26.41% profit in 4 days. I'll take that. I'd take that for sure. And you know, that's the thing, is that this strategy really keeps you in good trades, but you still want to try to play safe. You want to use a little bit lower leverage for this. Just saying. Kite will go into a little bit more detail. Link his video down below. Really cool guy. I actually PM'd him on Discord and he answered some questions I had for him. Left me on red, but he's a busy guy, so I don't blame him. But still, one more thing before I go though. Tyson actually asks everyone saying that he's not really going to be doing a Black Friday sale, but he says you do have until the 5th of December to snap up a lifetime membership for just $3.49. So now consider this a discounted period. The price rise is incoming. Now it's the time to pull the trigger. I've kept it low for much longer than originally planned. And yeah, this is true. Tyson, even in DMs, has talked to me about how he feels like it's a little bit too low for what he like. He feels like he puts too much more effort into it than what he's getting back monetarily. And you know, I guess now he's actually really gonna bump the price up. I don't know how much. Again, it could be double the price. It could be just another $100, but still, I would really recommend putting this on your Black Friday shopping list if you're gonna get it. And I know I show for this guy, you know, in my videos all the time, but still, I mean, the only reason I do it is because it works and it is much cheaper than everything else is out there. I would highly advise getting in on this. Again, I'll put a link in the description to check it out if you're interested in his plans. But yeah, again, hop on this if you're at all interested. Highly advise it. I like it a lot. I've been making some good money with it. I think you will too. Especially based off the strategies that I've listed before, can pretty much be used with other things, but it works really well with his indicator set, because this is what I've experimented with. So that's pretty much all for this video today, guys. I really do hope you got something out of this and hope to try to use these strategies as well, you know, in your own trading. Again, I wish you all the best. I hope you all have a happy Thanksgiving and a happy Christmas if you're watching this a little bit later. I'll go ahead and catch you all later. Thanks for watching.